Good morning, everyone. We will start the morning call. Asian markets are mixed this morning with a downward bias. US jobs or the non-farm payrolls increased by 5,17,000 jobs in January, well above the estimate of 1,85,000 jobs. The unemployment rate also fell to 3.4% versus estimate of 3.6%. This is the lowest jobless level since May 1969. That is, it's a 53-year low. So job market in US seems to be very strong, and this will lead to persistent inflation going forward, which bolsters the case for more rate hikes going forward. This sent the US Treasury yields and the dollar higher. I will now invite the technical team to take the call forward. Swati, we can't hear you.
Hello, am I audible now?
Yeah, go ahead, Swati.
Yes, okay. From the last two trading session, we are witnessing a very smart pullback rally in Nifty from almost 17,400 levels to 17,900 levels on the higher side. From oversold zone, Nifty had shown a very strong pullback rally and maintained a positive closing about the same, which gives some sort of a relief sign. Now going ahead, Nifty is likely to reclaim the 17,900 levels. Any move about that level, 18,000 levels can be tested on the higher side. Whereas on the downside, 17,700 will act as a crucial support level. So as long as Nifty sustains above that level, this pullback rally is likely to be extended towards 17,940 to 18,000 levels on the higher side. So as of now, the pullback rally is likely to be continued into the market. Coming towards the bank Nifty, for today intraday purpose, the first support is placed at 41,040 levels. Below that level, 40,800 levels can be seen. On the higher side, the resistance is placed at 41,970. About that level, 42,280 levels can be seen on the higher side. Even though the pullback rally is witnessing into the bank Nifty as well. Coming towards the Nifty Finance, 17,750, 17,870 are the resistance zone for the Nifty Finance, whereas on a downside, 17,400 and 17,200 are the support levels. The overall view on the Nifty Bank Nifty and Nifty Finance will, for the short-term period, will be the positive, as we are witnessing a pullback rallies into the market, and this pullback rally is likely to be continued as long as it sustains their supports level, which I have just mentioned it out. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, Nifty has seen very important data changing. So we had said, the data was positive. However, it changed in the last hour or so in the on Friday's session. You have seen PCR move up, but very importantly, VIX has come down. FI's selling has come down a bit. Open interest is low. So all in all, the data is still positive. However, 18,000 is strong resistance on the upside, and that will continue to remain a strong resistance. So once that is broken, you will see some good buying coming in Nifty, and which can take it towards the 18,250, 18,300 odd levels. But wait for the 18,000 levels to break. Only then initiate buy calls at this point of time. Um, from the stock specific front, it's mixed data. However, DVs witnessed a lot of shorts because on back of bad results. So yeah, they're likely to be further selling in this stock. Some breakdown has come in. While on the other hand, finance stocks like M&M Finance, Bajaj Finance, they've broken out, and they are most likely to do well in the coming couple of sessions. So M&M Finance, L&T Finance, Bajaj Finance, the Bajaj twins, they should do well. Look out for the same, from a trading perspective. Yeah, so that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Bank of Baroda result is in line with expectation. Asset quality continued to improve with net NPA coming at 1% versus 1.2% in September quarter. Also, ROA improved to 1.1 versus 1% previously. Stock is trading at 0.9 times price to book. We remain positive. Manappuram Finance result is in line with expectation. Gross NPA reduced for both gold and microfinance. So although overall AUM growth was subdued at 5% year on year, the non-gold AUM grew 33%, but the gold AUM declined by 9% despite higher gold prices, and tonnage also continued to decline sequentially. So this is a negative sign that the core business of gold is not performing. On the yield side, which has been impacting the stock, the yields were last year at 25%, went down all the way to 19%, and since last couple of quarters has recovered back to 22%. But we remain neutral due to higher competition from banks and NBFCs, be it HDFC Bank or Bajaj Finance. Both these large players have very aggressive plans in expanding in the gold loans. SBI result was above expectation. It posted all-round strong performance. Slippages remain subdued and below expectations. All other asset quality parameters also improved. Net NPA, restructured book, SMA, and NIMs also expanded, which led to beat on earnings mainly. And NIM is expected to sustain going forward also and not decline in, as is the case with other banks, because CD ratio here is very low, and also bank has high liquidity. Loan growth was at 19% year on year and 3.6% sequentially, and they have guided for 14 to 16% kind of loan growth going forward. ROA was at 1.1%, which is a 10-year high. So numbers were impressive, and we remain positive on SBI. Mahindra and Mahindra Financial result was above expectation. Loan growth accelerated to 26% year on year, which is again a multi-year high. Credit cost came lower at just 0.8% versus expectation of 1.7%. Companies saw improvement on all asset quality parameters, and ROE is likely to sustain at management guidance of 2.5% levels going forward. Also, even this quarter, it was about 2.5%. So we remain positive on Mahindra Financial. Lastly, Paytm, which is 197 Communications. result is above expectation. Revenue grew 8% sequentially, 42% year-on-year. Company has achieved EBITDA before ESOP cost break-even in the current quarter, ahead of its target timeline of September 2023 quarter. So 2 quarters before only it has achieved the target of EBITDA positive. And this was achieved mainly because of operating leverage. However, at the profit after tax level, there was a loss at almost 400 crore, but it was lower than expectation of 530 crores. Stock is trading at market cap to sales of 4.2 times Q3 annualized sales. So we changed our view from neutral earlier to positive on Paytm. Yeah, that's it from my side. Thank you.
Yeah, good morning. Star Cement result was above expectations. Volume stood at 0.9 million ton versus 0.89 million ton sequentially. Realizations were higher at rupees 6,835, mainly driven by increase in share of trade sales, which were up by 6% year-on-year and 2.6% sequentially. EBITDA per ton stood at 1197 versus 782 sequentially, mainly driven by better cost optimization during the quarter. The management has guided sales volume to be 4 million ton for FY23. However, we believe that the company operating in northeastern region, which is a relatively smaller market where the supply is more than the demand, we believe that realizations may be muted going forward. So we are neutral on the company. Dalmia Bharat result was above expectation. Sales volume were in line with expectations at 6.3 million ton. Realization stood at rupees 5,325 versus expectation of 5,284. Realizations were higher due to better pricing. EBITDA per ton stood at 1,022 versus expectation of 923, and quarter on quarter 653. The stock is trading at EV by EBITDA of 12 times FY24. The company has its con call today where further details are awaited. Birla Corp result was below expectations. Sales volume came in at 3.72 million ton versus expectation of 3.83 million ton. Cement realization stood at 5,177 versus 5,151 sequentially. EBITDA per ton stood at rupees 388 versus expectation of rupees 508. However, if we exclude Mukutban, the EBITDA per ton stood at rupees 468. The company optimized its fuel consumption mix, of which full benefits will be realized only in Q4 FY23. Fuel prices have started to come down, wherein the petcoke prices have fallen almost 13% from September end, and coal prices have corrected by 20% during the same period. Fuel cost during the quarter had gone down by 2.6% sequentially. Further correction is expected in fuel prices, which will improve company's profitability. The company is also looking to scale up its production of coal from its own mines for further cost rationalization. With production being scaled up at its Mukutban plant and the expanded capacity at Chanderia, which has been commissioned, we believe company will improve its presence in the western region in the next few quarters, driven by robust investments in infrastructure. We remain positive on the company. JK Cement result was below expectation. Revenue came in at 2,288 crores versus expectation of 2,263 crores. EBITDA was down by 11% sequentially at 263 crores. Margins were also lower at 11.5% versus 14% sequentially. The stock is trading at EV by bit of 11.6 times FY24 earnings. Thank you.
Good morning. JK Tires announced its result. Revenue came at 2,613 crores, which grew by 18% on a YY basis. EBITDA margin came in at 9.4% versus 7.9% sequentially and 8.9% YOY. The profit margins improved mainly due to softening in raw material prices as well as continued focus of the company on cost control and timely price revisions. Going forward, the management believes the tire industry is set to witness healthy demand in the domestic market, emanating from improved vehicle utilization and thrust on infrastructural development. The company's board approved raising up to rupees 240 crores through the issue of securities. The stock is trading at a PE of 8 times FY24 EPS. Thank you.
Good morning. ITC Limited has posted decent results with revenue growth of 3.5% YOY. The performance was largely driven by strong volume growth in cigarettes and FMCG segments. The revenue from FMCG others grew by 18.4% YOY, which is 1.5 times to Q3 FY20 revenue. This was largely driven by staples, biscuits, noodles, snacks, dairy and beverages, and soaps. Education and stationery products business continues to witness strong traction. The segment margins grew by 90 basis points on a YOY basis at 10% on account of strategic cost management, premiumization, pricing actions, and digital strategy. Revenue from cigarettes grew by 16.7% YOY, backed by strong volume growth, and EBIT margin at 63%, which was up by 16.9% YOY, driven by innovation and premiumization. Hotel segment revenue grew by 50.5% YOY, while EBITDA margins stood at 31.5% compared to 24.7% for the Q3 of last year, backed by operating leverage. There was an impact on agribusiness due to restriction on exports of wheat and rice. However, segment EBIT margin stood at 32.6%, which was driven by strong growth in leaf tobacco exports and value-added agri products. Paper and packaging segment grew by 12.7% YOY. Segment EBIT margin stood at 35.2% YOY. Margins were improved during the quarter, backed by higher realizations and some strategies like pulp manufacturing, capacity expansion in value-added products, where it observed scaled-up operations and digital approach. Overall EBITDA margin reported at 37.9%, which was up by 520 basis points on a YOY basis and 130 basis points on a QOQ basis. The stock is trading at a PE of 23.6 times to FY24 EPS, and outlook is positive. The Marico Limited result is in line with expectations. Revenue reported at 2,470 crore versus the expectation of 2,498 crore. The volume growth was observed at 4%. It has observed 2% volume growth in parachute coconut oil, low teens growth in edible oils. Further, it has gained market share in value-added hair oil segment. EBITDA margin reported at 18.5% versus the expectation of 18.4%. The management expects operating margins to be in the range of 18 to 19% in FY23. The stock is trading at a PE of 40.8 times to FY24 EPS, and the outlook is positive on the stock. Aarti Industries Limited result was in line with expectation. Revenue reported at 1,668 crore versus the expectation of 1,666 crore. On a sequential basis, revenues were maintained despite some correction in prices, largely on account of higher mix of value-added products. However, products linked to textile industry like dyes and pigments remain subdued, as was in the Q2 also, and the recovery in demand is expected over the next 2 to 3 quarters. EBITDA margin reported at 17.3% versus the expectation of 16.2%. The improvement was backed by dynamic product mix. The stock is trading at a PE of 22.2
2 times to FY24 EPS, and the outlook is positive over the long term, as management is expecting 25 to 30% of EBITDA margins, and also it has a capex plan of 2,500 to 3,000 crore for chemicals in FY24. The Rosari Biotech Limited result was below expectation. The revenue reported at 389 crore versus the expectation of 507 crore. The company has delivered a stable performance on standalone basis. However, on a consolidated basis, the HPPC segment posted lowered revenue as subsidiaries witnessed slowdown due to subdued demand. The EBITDA margin reported at 13.9% versus the expectation of 14.5%. However, there was an improvement from 10.9% the year ago. The marginal improvement in the profitability was on account of moderation in raw material cost. The stock is trading at a PE of 21.4 times to FY24 EPS, and the outlook is neutral over the near term. Thank you.
Harshal, you can take over.
Yeah, thank you, Jen. Good morning, everyone. In today's session, we expect gold silver to bounce back after this fall on Friday. But however, on rise, there should be some selling pressure. So in gold, one can expect prices to test 57,000, 57,100, and from that level one can expect some selling pressure. So for a pullback, one can buy and buy around 56,800 and maintain a stop loss of 56,550. And on higher end, 57,200 one can sell and maintain a stop loss of 57,400. In silver also, prices should hold 67,400 to 300 levels, and pullback till 68,50, 69,000 is expected. After that, there should be some corrections. So one can trade in this range, and if you are buying, then maintain a stop loss of 66,800. In crude oil, 6080 is the important support level. So one can buy with a stop loss of 6,000. And on pullback, one can expect 6150 to 6200 on higher end. Natural gas prices are in oversold zone. We expect some bounce. So strictly, one can keep a stop loss of 195 and go long for a target of 220 to 30. And metal front, copper, we expect some pullback till 776, 778, whereby again selling pressure should be witnessed. So all in all, prices should be in a range from 767 to 778. In zinc, 280 is a supporting area, and if it is holding on, then a pullback till 285, 286 is expected, whereby again some selling pressure will be there. So keep taking profit taking if you are entering long and maintain a strict stop loss. In aluminum also, we expect prices to pull back till 223.50 to 24, and prices are supportive at 221. So as long as it is holding 221, the pullback should be expected. Yeah, and that's it from us. Thank you very much.